Welcome back, everybody. Thank you so much for clicking on this video. Today we're going to analyze Nu Holdings, ticker symbol NU, which was Morgan Stanley's #1 global stock pick from my previous video. Now, this company is called a diversified bank, although it has many other financial products, including investment services, crypto investing, insurance, etc. And its market cap is $38.5 billion currently. The company did expand into Mexico and Colombia by 2020, and since doing so has seen amazing growth. The company added nearly 19 million people in 1 year and is involved with 51% of the Brazilian adult population. Since Q3 2021, their customers have grown at a CAGR of 36% per year, their revenues by 103%, their gross profit by 95%, and their net income has grown 34% quarter over quarter since going positive in Q3 of 2022. And here on this slide, we can see that there is a range of products that Nu offers. Obviously, they offer banking services, which they have over 64 million different accounts for 73 million customers. But they also offer nearly 40 million active credit cards, 7 million personal loans, 12 million investment accounts, 10.5 million crypto investment accounts, 1 million insurance policies are active, and they have nearly 2 million active small enterprise accounts. And what I found super interesting is that taking a look at these honestly really beautiful graphs, we can see that not only is Nu expanding its customer base, it's also monetizing those new customers much more quickly. And so how we read these is that each line represents a different cohort of people. So the lightest line represents people who joined in Q1 of 2017, which is some of the earliest customers of NuBank. And the darkest lines represent the newest customers, with the most recent joining in Q3 of 2023. And these graphs are meant to show the progress of each cohort as they have been a customer with the company. On this far left graph, it shows the active customers using NuBank as their primary banking account, which would mean that you see a lot more money coming in, obviously, a lot more transactions, which means more money for like credit card services. And so the original cohort of customers in Q1 of 2017 took nearly 80 months to reach the 60% goal that the company has laid out, whereas their newest customers that are joining in the last year or so are taking much less time at approximately 20 to 25 months. So what this shows is that the newest customers are also being active customers sooner, which is a great sign for future revenue potential. Now in the middle graph, we see this is the number of products per active customer. So we would consider a product like 1, a bank account, 2, a credit card, 3, an insurance policy, 4, a new investing account, and maybe 5, a crypto account or something like that. And so what we see is that the oldest cohort generally started with just one product, probably the bank account, and it took them nearly 80 months to almost reach an average of 4 products per customer. Now that's still pretty good, but if we take a look at their newest numbers, their Q3 2023, these people are starting with 3.5 products. So the minute that a new customer joins NuBank's ecosystem, they might open 3 different accounts, maybe 4 different accounts. And so obviously that means a faster revenue growth for that customer base. And what we're seeing is that it takes on average about 15 to 20 months for this cohort and for more recent cohorts to reach 4 products per customer. And then finally on the right hand side here, we see monthly average revenue per active customer by quarterly cohort. So everybody obviously starts at 0, but what we see is that the most shallow, kind of slowest growth is with the oldest customers, and the fastest growth is with the newest customers. So if we take where the Q3 23 cohort is at approximately $8 or $9 here, and we draw this out, it only took the newest cohort about 17, 18, maybe 19 months to reach that $8 per user, whereas the original cohort in 2017 took nearly 55 months to get to that. So what this graph shows me is that even though Nu Holdings' growth has been exceptional, it's possible that their growth is only now starting to accelerate as they reach into new customers in new regions like Mexico and Colombia, as well as monetize those customers faster than before. And on this slide, I wanted to draw your attention to the net interest margin percent, which is very exceptional. It's this number here that is above the black line. So they started out at 11.1% in Q3 of 2022 and are currently sitting just under 19% in Q3 of 23. Now, net interest margin fluctuates a lot and it's heavily dependent on interest rates. But if we just look at the numbers here, 11% to 18% is incredibly high, especially if you compare these to American banks. So it's one thing I wanted to point out was that Brazilian banks in general, and NuBank especially, have very high margins on their customers. And so that means that they're very profitable when the economy is doing well. And so if you do have that thesis that Latin American countries are going to grow, they're going to experience strong economic growth, then these banks are really intriguing investments. But I don't want to make it sound like all sunshine and rainbows because obviously as a bank and a company that loans out money to people, we need to know how strong their loans are. And so what we see is a trend that in all honesty probably matches pretty closely with most banks, even in the United States, where we see this kind of level delinquency that kind of popped up around the pandemic, then dropped significantly and has been growing back ever since. And so currently they have 4.2% of their loans delinquent by 15 to 90 days. In the 90 plus day category, we can see that this number is all the way up at 6.1%. So while the profitability of this bank is very high, they also have very high delinquency numbers. The trend might be similar to American banks, but American banks do not have 6.1% of their loans potentially going bad unless they're heavily invested in commercial loans today. So that is definitely something we need to be aware of, that the loans are highly profitable, but that comes at the expense of also being a little more risky than your typical American or European bank. And so before we get into the nitty-gritty financial numbers to see just how explosive this company has grown, can you please take a moment to like this video and subscribe to my channel, as it really means a lot to me as a small YouTuber, and it helps me figure out what kind of videos you guys want to see in the future. As always, thank you so much for taking the time to view this video, and with that, let's get into the numbers. NuBank's annual revenue has grown by over 100% per year for the last 5 years and currently sits at $3.1 billion versus $155 billion in 2018. So yeah, the growth has been pretty crazy. Net interest income shows much the same, sitting at 138% per year, where the company in 2018 only earned $100 million on their interest, but now earns $3.8 billion. The company's operating EPS did go positive and currently sits at 8 cents per share in the trailing 12 months. And their operating margin sits at 36%, which is very high for a bank, especially when you compare it to American or European banks. Since becoming profitable, NuBank's return on assets is currently sitting at around 1%, which is pretty on par with its international peers, so certainly nothing to complain about there either. Since going public as a part of a SPAC in 2021, the company did see a massive jump in shares outstanding, obviously, but even after their IPO, we have seen NuBank issue new shares every single year, which is definitely something that you want to watch out for as an investor because it dilutes your percentage share of the business. Cash on hand has grown nicely as well, and this tends to happen in conjunction with growth in deposit volume, but having $3.2 billion on hand is good no matter what, so I won't complain there. What is much more worrisome, though, is their provision for loan losses. So like we saw a little bit ago, their delinquency rate is higher than what most American or European banks would be sitting at. And this means the company needs to keep more money on hand for potential loan defaults. But what really caught my eye is the fact that in the trailing 12 months, the company has $2.1 billion set aside for these loan losses. If you compare that to their revenue for the trailing 12 months, which is at $3.1 billion, essentially what we're talking about is 2/3 of the company's revenue being set aside for loan losses. Now, I'm not entirely sure if there's a regulatory reason for this. I'm not super familiar with Brazil's banking system, but this definitely raises a lot of questions. And if you are interested in investing in NuBank, I think this is the first thing you need to look into is why they have such high provisions for loan losses. Is that normal for all Brazilian banks? Are they doing it to be compliant legally with, Brazilian law or Colombian law or something? Or are they doing this because their loan book is really, really that bad? To get back to the brighter news, though, the company has seen a 46% annual compound growth in their book value per share, and their tangible book value per share has grown at about 42% per year. So these are both exceptional growth numbers as well. Free cash flow per share has yet to be consistently positive, and I'm okay with this for the time being because NuBank is in their growth and customer acquisition phase, and so that typically means they spend a lot of extra money on advertising, on trying to earn new customers. So it's understandable, and as long as the company continues to grow at such a rapid pace, I don't think such small fluctuations in their free cash flow per share is such a bad thing. In this chart, we see the company's weekly closing price to book value number, which is denoted by this black line, versus their average price to book value of 5.5, which is denoted by this red line. And so what this chart is showing us is anytime this black line is below the red line, we would consider it undervalued compared to its average price to book. And anytime it's over that red line, we would consider it to be overpriced versus its price to book value. So with a price to book currently sitting at 6.9, we could say that NuBank is slightly overvalued on a price to book basis. Although I do want to point out that because the book value growth has been so explosive over the last 5 years, it's not totally unexpected to see such a high price to book value, and I wouldn't necessarily put much weight into its price to book value currently because the book value part of that equation is just growing so rapidly. Taking a look at NuBank's earnings per share chart and its stock price versus its fair price, we can see that the fair value PE for NuBank is 68 versus its current PE of 104. So it sounds like it's very, very overvalued right now. But if we factor in that the projected compound annual growth rate for this company is 40% per year for the next 5 years, things start to look a little more fairly valued. The stock's current close price is about $8.50 per share, and its fair value in 2023 was about $5.50 per share. So it looks wildly overvalued on that basis, but by the end of this year, we would expect the company's fair value to be $7.50. By the start of 2026, we would expect it to be worth $11 per share, and by the start of 2027, it could be worth up to $15 per share. So even with such high current price to earnings ratio, that compound annual growth more than makes up for it. And we could potentially see Nu Holdings stock double in just a couple years if their projected compound annual growth rate comes to fruition. So on a final note, even with those absolutely massive growth numbers, I think it's important to look at the pros and the cons of this company. Number one is probably quite obvious. The huge growth is the most important part of this business and why it is so attractive right now. And like I said earlier, it looks like the growth might even be accelerating at this point. So I really don't know what the max limit of growth is for NuBank. All I know is that they definitely haven't hit their peak yet. Secondly, I like that the company focuses on emerging economies, as this serves a couple of different purposes. Number one, they're generally underserved and might have more stagnant banking systems. So to modernize those banking systems and financial system in general should be quite helpful for the economy as a whole. And number two, the economy still has a ton of potential future growth left in the cards. So if the economy of the underlying country is growing, that makes Nu's customers more valuable, not just because they earn more money, but because they spend more money and they have more money to invest, etc. And number three, Nu and, like I said, all Brazilian banks in general have great margins relative to their global peers. And so this tends to be a very high margin, very profitable region of the world to invest in when times are good. But with every pro, there's a con, and my number one con is that they have very high provisions for loan losses at Nu. As I said when I was going over those loan loss numbers, I'm not sure if there's a regulatory reason for those numbers to be as high as they are. There could be, and that would explain a lot and honestly ease a lot of my fears. But if there is no reason beyond the fact that the company just expects to potentially lose almost, $2 billion in loan defaults, then I would be much more worried. And this goes hand in hand with Latin America just generally being a more difficult country to invest in and to loan out in, just because there historically tends to be higher default rates. And so more profitable banks, but also more risky banks. That's kind of what we're looking at here. Secondly, the economies that NuBank is exposed to currently are very susceptible to global downturns. So Mexico, Colombia, and Brazil are all still developing economies. And while I am pretty bullish on all three of those economies, it's not a straight line and things don't just go up, they go down, they go sideways. And so if there is any sort of global economic downturn, I think that these economies in particular, and therefore NuBank, are really, really going to struggle. And so I would expect this company to be more risky to hold in those recession type environments. And third, Nu has a very high price to book value. And like I said when I was looking at that chart, the price to book is not as important because their book is growing at such an exceptionally fast rate. But it is still something we have to keep note of, because if that book value stops growing or goes negative, due to some sort of economic catastrophe, then we could see some major multiple compression, which could lead to a major crash in the company's stock price, even if the company itself continues to do okay. So that's just another thing that we need to be aware of if we do choose to invest in Nu. And so for my final thoughts, I think Nu is an extremely interesting company. And even though it does have the very high provisions for loan losses, I think the growth potential outweighs that risk, at least as far as keeping my interest. I don't know if I want to invest in this company or not yet. I definitely need to do a little bit more research on why their provisions for loan losses are so high. But I do see a ton of potential in Latin America and the growth that NuBank is experiencing there. So this is not a stock that I just want to rule out. So those are my thoughts. What are your thoughts on the company? I would love to hear what you have to say down in the comment section below. And if you haven't already, please like the video and subscribe to my channel, because I don't want you to miss a single upload. I have plenty more videos coming and I can't wait to share them with you. So with that, guys, I hope you have an amazing day and I cannot wait to see you next time.